So, purchasing a home is a big financial step, and the amount you need to save for the down payment can seem daunting. However, it is not impossible, and it's all about creating a strategy and a plan to save for your home. And keeping in mind that buying your home, buying that first home, can be a cornerstone to building wealth and even passing down generational wealth. So, are you currently saving to buy a house? Well, you're going to want to tune into this video. Hey everyone, my name is Bola Shokumbi. I'm the founder and CEO of Clever Girl Finance. I'm also the best-selling author of the Clever Girl Finance book series and my most recent book, Choosing to Prosper. Welcome to Clever Girl Finance TV. So in today's video, we're going to talk about how to start saving to buy a house. So there are so many factors that tie into saving for a house, and they include how much house you want to buy and also the real estate market in which you are trying to buy your house, the city, the state, the country, for example. And so buying a house can be a really big financial expense and also a big financial commitment. That said, buying a house starts with saving for your down payment, and that is what we're going to get into. And so to save for your down payment, here are some key things that you need to do. Number one, you need to determine the actual amount you need to save before you start saving for the house, right? You need to know exactly how much money you need to save towards the down payment. And your down payment will be calculated as a percentage of the home price. That's one factor. It also depends on the lender and the type of home loan or financing they are going to be leveraging to buy the house. So for example, if you're looking at a conventional loan, you may be looking at saving 3% of the home price as your down payment. And this is assuming that you have good credit. If you are looking at an FHA loan, then you might be looking to save 3.5% of the home price as your down payment. There are other different loan types that may require down payments up to 20%. So it's all about having the conversation with your lender about your financing options. And you may even decide that, you know what, so these are the down payment options provided by the lender, but I want to put down a larger down payment onto this house, right? So you want to really factor in what it's going to cost you in terms of how much you need to save for the down payment based on what your lender requires and what you personally want to do. You also want to inquire about closing costs so that you can build that into your savings for that down payment, because that is going to be a cost that is due during the home buying process. Number two, create a monthly goal towards your down payment savings. So essentially, you now know how much you want to save for a down payment, and now you need to determine based on your income every month, every time you get paid, how much you can put aside each pay period. Number three, next, you want to add a line item to your budget. So you know how much you want to put aside, build it into your budget. Add a line item that says saving for house down payments. Put the specific amount to buy that amount, so that by that line item, that way you know each time you get paid, you look at your budget, this amount automatically or manually is going towards saving for your house down payment in a specific account. I would definitely suggest automating this transfer so that you don't have to think about it, so that it just happens and you can stay consistent with saving for that down payment. Number four, determine the time frame as to when you want to purchase your home. So really the time frame is going to be around how soon you can save your down payment, right? And the more aggressive you are with fine-tuning your expenses, cutting back, figuring out how to earn more money, the quicker you are able to save your down payments. Keep in mind that depending on where you are financially, right, you may not be immediately in a position to take on a mortgage. However, you can start to put money aside while you do things like improve your credit and get yourself in the position where you're able to take on a mortgage. So for many people, it can take a couple of years to several years to save for their home down payment, and that is perfectly fine. The key is to stay consistent so that when you get to that time frame of yours, you have the money and you're ready to go. Number five, and I just mentioned this briefly, but I want to highlight it again, and that is to open a dedicated and separate account for your house savings. You want to be able to see the progress you're making to that specific amount you're trying to save for your house down payment, and you don't want to blend that money into any other financial goal, so that you can stay on track to saving for that house. And number six, I also mentioned this a little briefly earlier, but automate automate those transfers. When you automate your savings, you are more likely to save and stay consistent. And there are even studies that support this. So automate those transfers to the savings for your house down payment so that you can continue to save consistently over time. And then number 7, it's important to save some more, especially for those associated costs. So when it comes to purchasing a home, the down payment is actually not going to be your only expense. There are other expenses associated to saving for a down payment and being able to purchase that house and then move into that house, right? So some expenses and associated costs that you want to keep in mind would be closing costs, inspections and appraisals, moving costs, furnishing, decor, and or renovation costs, and things like homeowners association fees. These are all fees that you want to start to plan for as you get closer to that time frame of when you are ready to purchase your home. And while all of these expenses may not apply to your situation, it's always a good idea to have extra cash put aside outside of your down payment in case anything comes up in that process of your home buying. Number 8, you want to improve your credit while you are saving to help you save money on mortgage interest. So improving your credit is not directly related to saving for the down payment, because that is just you putting money in a bank account so that you can have that percentage of the mortgage to put down on the house. However, what's really key here when it comes to your credit is that your credit rating is going to determine what the interest rate is on your debt. And interest rates are impactful. They're very important to understand because interest rates is what you're going to pay to be given this home loan, right? It is the cost of the mortgage, and interest rates compound, right? So even a half percentage point can mean several $100s a month in payments on interest on a mortgage. So you want to start thinking about ways to improve your credit. Is there any high interest debt that you have that you can just prioritize and pay down? Are there any past due accounts or debt in collection that you can start to resolve? Are there any negative remarks on your credit that you can start to investigate and see how to get those removed or take actions to have positive remarks be added to your credit report? It's really, really important that you take those steps to improve your credit so that you can lower the interest. You want to qualify for the lowest interest rate possible when it comes to purchasing your home so that you can save on those on that interest compounding every month. And then that really means you saving hundreds or even thousands of dollars. And over the life of your loan, just improving your credit so that you can reduce your interest rate when you're buying the house can save you tens of thousands of dollars. So when it comes to improving your credit, here are some key actions that you can take. Number 1, pull your credit reports and your credit score so that you know where you currently stand. Determine what debts you have and focus on paying out any high interest credit card debt, as I mentioned, so that you can reduce your debt to credit ratio. This is how much you owe compared to the available credit you have available to you. And then dispute any issues or inaccuracies on your credit with the bureaus and the lenders. And you also want to avoid applying for new lines of credit as your home purchase timeline gets closer. So now you know the steps to take when it comes to saving for your home down payment. And the good news is that the money that you save to put towards your home down payment, in addition to improving your credit, is going to help you get a lower mortgage payment every month. So the more you're able to save, the more you're able to put down, the better you're able to improve your credit to get a lower interest rate. These are all things that are going to work to your benefit when you finally get to the point of purchasing your home. So definitely keep that in mind. It might be a long road to save for a house, especially if you need a significant sum depending on the city you live in and the home prices, but it can be totally worth it if you're able to stay consistent. You will be able to achieve that dream that you have of home ownership. We also have an in-depth course on clevergirlfinance.com about buying your first home, and we go through the process step by step, including questions to ask lenders, specific things that you need to be prepared for, and a whole suite of useful detail that can help you be prepared on your home buying process. So I encourage you to check out that course. Just visit clevergirlfinance.com/courses, scroll down, and you will find that completely free course on buying your first home. I hope you've enjoyed watching this video. Be sure to hit the like button, subscribe to this channel, tell your best girlfriends about Clever Girl Finance. Stop by our website at clevergirlfinance.com. We will also link to that free course below so that you can check it out. And I will see you next time. Thank you so much for tuning in.